the technology became available, the increased progressiveness of bank executives are slowly coming up the curve, and the regulators in general are starting to understand a little bit more about data sovereignty, data security. While there is a push towards data sovereignty, they also understand that onshore, if you have a data center and the cloud capability, that does enable you to have some sense of control over some of those conversations.
Hello and welcome back to FUMO, Future of Money, the podcast produced by CFTE, supported by our sponsors XVC Tech and MENA FinTech Association. We're welcoming today Kelvin Tan, a good friend and CEO of audax. Kelvin, welcome to the show.
Hi, Ronan. Very happy to be here.
Kelvin, audax. What does audax mean and what does audax do?
Well, audax is a technology company. We have a bank in the box that we enable capabilities for banks around the world where they can get to market really quickly with full comprehensive end-to-end capability and spring up multiple different digital banking businesses. Digital bank, banking as a service, embedded finance, open banking. Audax actually is a French Latin word that means courage. And that is the reason we picked that was because that is the kind of character that we would like in our company. And the people with the courage to push the frontiers of what and imagine what is possible.
So you're courageously pushing the frontiers of banking and helping reinvent banking, starting in Southeast Asia and then beyond. Banking as a service is often a term used to describe what you guys do. What does banking as a service mean? Can you give the audience a little bit about the history of BaaS and also how it differs in Asia relative to Europe and the US?
Well, first and foremost, the reason we're famous for banking as a service is because that's the first use case from a business model standpoint that we've enabled for Standard Chartered Bank in a couple of markets. The reality is that the technology stack that we provide enables you to do multiple business use cases, banking as a service being one of them. And directly to your question of what is banking as a service, like I always tell people, you ask 20 people what banking as a service is, you get kind of 20 slightly varying answers. Fundamentally, what it means is the provision of banking products and services, including servicing the customer and engaging the customers on queries, to provide those capabilities within somebody else's ecosystem. Could be branded somebody else, maybe it's in your own brand, but that's those services and the consumption and utilization of those services within somebody else's ecosystem. There are two distinct somewhat ways of executing banking as a service around the world. There's the quasi-European and American model, whereby you have a sponsored bank at the back end, a technology layer intermediary in the middle, and then an ecosystem on the front end with all the customers, right? So in this case, you would have a good example, although it's in a bit of trouble now, is Evolve Bank and Trust at the back end, Synapse in the middle, and Mercury on the front end. The other execution of banking as a service is pretty Asian-centric, which is where you have the bank, the licensed bank itself, with the technology in the bank providing those services directly into those ecosystems, such as WeBank in China or Kakao Bank in Korea, and obviously now Standard Chartered with the help of audax in a couple of markets like Indonesia and Malaysia. So those are the two divergences in execution of banking as a service, but the overall thematic approach and the reasons for it generally don't change.
And why a different approach in large parts of Asia to large parts of the Western world?
I can hypothesize on that, but I don't really know what the reason is. I suspect the reason is because banks are a little more conservative in the quasi-Western world, which allow for technology intermediaries to come in and try to intermediate that customer journey. However, that being the case, there are certain risks that come along with it, as we see unravel in some countries. In the Asian context, you would also appreciate that the countries that we talked about have been, at least in the last 2 decades, really pushing the envelope of what banking business models could look like, not just for retail bank, for SME, but also for corporates. And I think that's really the difference as to how the two models diverged.
Bank as a service in the context of Asia or Southeast Asia, why now? Why has it become a thing in the last few years? And tell us a little bit more about some of the ecosystems or partners where you worked or other similar providers work.
Yep. I think banking as a service, Asia or otherwise, is being driven as a response to the increased pressure on return on equity for banks. Because at the end of the day, banks around the world are trading what, 2 to 4 times book. If you were a large global LP, you would certainly think about putting your money elsewhere to generate better returns than putting it in a bank or investing in the bank. And therefore, there is pressure for banks around the world, without doubt almost, to generate better returns off their balance sheet for retail and small and medium businesses. And the only way to do that is either you grow balance sheet without changing costs significantly, or you get massive new margins on top of your balance sheet, or new fee income, and so on and so forth. Now, banking as a service business model then comes in and ticks a lot of those boxes. Be the ability to acquire customers at next to no cost, the ability to service those customers at a fraction of your current cost, no branches, no sales staff, no need to invest in top of the line marketing, which generally constitutes approximately, cumulatively, 30 to 40% of your yearly OPEX. So if you remove all of that, your return on your bank or your retail banking, SME banking balance sheet shoots up from the mid-teens to the mid-20s, right? Minimally speaking. So that really does change some of the narrative around it. That being said, obviously there are many conversations around the risks of banking as a service. Who owns the customer? Do we really want our brand diluted? Those conversations are happening, which kind of explains why it's projected to be very, very big in the next 5 to 10 years, but it's taking its time to get there.
And if you look at other models, so use of banking as a service in, say, China or Korea and East Asia, are there sort of things in the timeline that's driven the adoption of BaaS?
Well, basically the technology is now available to make that happen quite easily. Right? Everything can be microservices based. Your data infrastructure is cloud compliant. You can drop nodes and make it infinitely scalable. All of that was not available 20 years ago, right?
Right.
I mean, APIs were, but the rest of it was generally developed. Kubernetes really came into fore as a scalability capability in the last 10, 15 years. So that the technology became available. The increased progressiveness of bank executives are slowly coming up the curve, and the regulators in general are starting to understand a little bit more about data sovereignty, data security. While there is a push towards data sovereignty, they also understand that onshore, if you have a data center and the cloud capability, that does enable you to have some sense of control over some of those conversations. So I think it's a slight coming together. I'm not saying it's perfect. There are different markets at different levels of that synergy and alignment, but you will see. I think it's an inevitability that all banks are thinking of it this way at some point.
So a decade ago, you'd say we didn't discuss this because the technology didn't exist.
At least the technology wasn't widely adopted enough to assuage people of the security capabilities of that technology.
And in your experience at audax or other examples you've seen, typically where is BaaS being used in terms of like, who are the partners or the end users?
Yeah. Well, we've been we're a very young company. We've only been around for less than a year. We were operationalized 31st August of last year, but we've already engaged with quite a number of banks globally in various regions, largely Southeast Asia and the Middle East, and a little bit of the Europe discussion. I would say almost without exception, banking as a service, embedded finance comes up as a talking point in terms of what they can pursue with the audax technology solution. And there's no discrimination with regards to geography from that sense, right? We've had that conversation with a client from Cambodia to a potential client in Vienna to a potential client in Abu Dhabi, for that matter. So it doesn't really make a difference from a geography standpoint.
And the clients are typically, these are other traditional financial institutions, or they're non-financial institutions, they're commerce companies. What kind of partners are what are the ecosystems you or similar companies to you would be partnering with?
So obviously, my clients are technically banks, right? Typically banks, generally tier one, tier two, tier three banks, looking for a way to either transform their existing stack for scalability or modernization. Two, want to do banking as a service and need the technology to do it, or three, just want to launch a digital bank with the technology that we've got. So from my perspective, my clients are banks around the world, but I have seen many of the banks that we're talking to who want to do embedded finance and banking as a service. The partners generally are the same few categories with different brands in each category. It's e-commerce. E-commerce is very popular because obviously there's a lot of synergy there. You can do a ton of work with regards to cash flow management. You can, and with an e-commerce platform, you can do everything from retail to SME and some small corporates. We also see wallets and telcos being extremely favored as partners for their reach and their ability to have their availability of data on the individuals that then changes the game for the banks with regards to customer experience, onboarding and underwriting, as well as credit analysis and also collections. So those are the two big ones we see most often. There's travel, there are some of its wallets, but the big ones are generally telco and e-commerce.
And on the banks, focusing on the banks, typically are these the core businesses of large incumbent banks, or are you basically talking to digital flanker brands they've set up, or are they completely brand new digital banks?
There are two variants. Well, three. The first variant is they tend to be a niche new business that they want to set up. And that new business either sits in the existing retail SME bank or they ring fence it and put it outside. So actually a really good example that doesn't use an external stack is SEB in I think Denmark or Norway, one of the Nordics. SEB has SEB Embedded, headed by a good friend, Chris Malmer, who basically went through the journey I did in Standard Chartered. And they created a whole new line of business that reports directly to the CEO, if I'm not mistaken. But there are also other ways of executing it. In Standard Chartered, the banking as a service business sits within the retail bank, right? So we see a few variations of that. The third piece, which happens, is the fact that greenfield digital banks, separate and distinct, new entity, requires a tech stack that gets you to market quickly. So we come in and we say, look, we have a bank in the box. You give us your payment issuer processor, give us your credit risk engine, give us your reporting engine, and tell us where you want to put it. So you could put it in the cloud, you could put it on-prem, no issues, and we'll get you up and running in 6 to 9 months.
Yeah. As we look out to the BaaS opportunities around the world, where are you most excited about the opportunities? Where do you see the most adoption? Do you see it more in parts of Asia? Do you see it in the US? Is it going to be in the Middle East and Africa? Where are you most excited about the opportunities?
I think in the immediate term, personally, I'm most excited about the opportunities in Asia, for the very reason that we have a populace. Firstly, it's a large, growing middle class population. Right? In Indonesia, it's 60, 70 million people. You're going to see the next 10 years of the economy exploding. India is huge and massive, right? India is the world's youngest workforce in the next 2 years, and they will be the world's largest youngest workforce for the next 20, 30 years, right? I mean, as a betting man, I put all my money into Indian funds. So I see a lot of opportunity in Asia purely because size and scale determine that BaaS might be one of the most efficient ways of actually running banks around in those markets. I see also opportunity from a ticket size standpoint in parts of the Middle East, right? You may not have 500 million, 1 billion people, but you have each person obviously has a much higher per capita income and so on and so forth. So, but how many Middle Eastern markets are big enough that you're talking about tens of millions, right? So that's where I think the struggle will be. And there will be a few markets that gets a little exciting. UAE, maybe Saudi, because they're very progressive. It's certainly very exciting. Egypt, Egypt potentially is a very exciting market because Egypt does have a big population, although the middle class evolution will take some time.
And when you look at the differences in trends, maybe even sentiment between the US and Asia on this topic of BaaS, how would you sort of compare and contrast it without oversharing? We've been on some calls together, right? And is there seems to be quite a big difference in sentiment. Don't know how to exactly phrase this. You know where I'm going, Kelvin, right?
Ah, I
Exactly. Exactly. How,
I
how
I
do we
think
how do we get our arms around this kind of slight, difference?
at the risk of overgeneralizing, in fact, it's not the risk. I am overgeneralizing. I don't think there is a brush that you can
Yeah,
tar across
sure.
the opinion. But the approaches of the quasi-Western world, the Europeans and the American tends to err towards caution now because
Mm,
obviously the macroeconomics are risky. Cost of capital has gone up,
mm,
and significant focus on obviously individual liberty and rights, and therefore conversations around what's best for the consumer and how and what's the risk, and if we and they start going into an analysis paralysis of risk, which happens a lot in most banks around the world,
mm,
not just the Western world, but globally. On the flip
yeah.
side, you have obviously fast evolving technology capabilities in Asia that most people haven't even heard of, right? Largely in China and Korea,
Mm,
and a progressive mindset to push the envelope on some of these conversations. I'm not saying that there is no discussion on risk. There's lots and lots of discussions on risk, right? It's
mm.
inevitable, but certainly a conversation around how do we manage that risk? Is it an acceptable level of risk rather than this is a risk. Let's not talk about it. Really, at least that's in my experience so far. Could be wrong. Like I said, it's
Mm.
definitely overgeneralizing.
And you think there's just a generally more open mindset to change and willingness to take some element of risk right now in your experience? I mean, again, we're all generalizing, but we've seen, particularly, I think, in consumer banking, I don't know if that's the case in wholesale banking as well, but in consumer banking in the last 15 years, maybe even 20 years, but a lot of the pace of change or innovation shift from the West to the East, I think, from Americas, Europe to Asia. 30 years ago, it would have been, you know, products, concepts are made in the US or sometimes in the UK and Europe, and then brought over to the rest of the world. Starting with, this is like ancient history now, but starting with things like ATMs and consumer banking as a concept, in the 1970s to 1990s. But it feels like that world changed, and BaaS is part of that, where BaaS is being more, I should say, more enthusiastically adopted. Is that fair to say in Asia than in the West?
No, I think that's relatively fair to say to some extent. Uh, if if I were to hypothesize, and this is again personal opinion,
Sure.
I think I think that there is a significantly more focus on concentrated decision making in the East than there is
Yep.
in the Kazai West, and that is really a significant contributor to why things move the way they have moved. Whereas consensus seeking it seems to be a big thing uh, everywhere else. I
Yeah.
think that really is part of the key differences as to why things have moved the way they have.
Decision making, yes, following different models, and that's key. Now let's dive into a little bit more about your personal experience and the business you're building. And I want to bring Gaurav, my co-host and partner in crime, into the conversation so we can drill into a little bit more your background as a banker, your years at Standard Chartered, and then going off independent, or well, powered or backed by Standard Chartered, but going off independent to build your own thing as CEO. Gaurav, over to you. Are you going to ask him if his mum's proud?
No, I'm not going to do that. I'll leave that to maybe afterwards when we're, doing bloopers and reels and things, and he can dedicate his next book to maybe, that way. I'll leave that to Kelvin. But Kelvin, thanks a lot. It's good to meet you. It's an interesting story to hear so far. And the listeners that we have on this podcast are a lot of them are entrepreneurs, right? And a lot of them want to know or want to understand how you did all of this, right? So the first thing that I'd like to do, exactly as Ron had said, talking about the personal side and the business and commercialization side, is how did you get to this position? How did you start the company? What was your background? Did you didn't wake up one day and said, I want to do, my mission in life is banking as a service. I mean, I don't think many people have that etched on their tombstone today. So just as a curiosity, what was your background and how long did it take for you to actually create the company and start?
Well, firstly, I've always had a knack for getting into trouble. I've always gotten into trouble. As a kid, I've gotten in trouble in college. I tend to do strange things. Just to give an example, in college, in postgrad, I was in Chicago. I did most of my classes in the business school, even though I wasn't registered as a business school student. I was an international relations major.
Oh, wow.
And I justified all of that by saying that classes in the business school contributed to my understanding of the international political economy to some extent. Right?
You're not wrong. You're not wrong.
Exactly. Tenuous links, but links nonetheless. And throughout my career, if you just look at it, I would even hesitate to call myself a banker of any sort, because I think that would be an insult to real bankers out there. Right? I've done retail banking, I've done payments, I've done consulting.
In
I've
North
done
America, in Asia, which geographies?
mostly in Asia, Indonesia, Thailand, Singapore, mostly
Oh, wow.
Southeast
Okay.
as well.
Oh,
So I've done, retail banking, payments, consulting. I did analytics for Procter and Gamble for a while, which was a far left diversion from a career standpoint. And then I joined transaction banking with RBS, and then so I have a somewhat strange rounded career in terms of understanding somewhat both sides of the balance sheet, both corporate and retail and SME to some extent. But never an expert in any of those verticals. So, like I said, I think calling me a banker would be a massive insult to my friends and peers. And yeah, I just like to solve problems. I think I'm a guy who categorizes problems, breaks it down into solvable bits, and then tries to make things happen. And the genesis of this entire journey was 6 years ago. I came up with the idea because I thought that we needed to solve Standard Chartered Bank's problem of lack of scale in the retail and SME bank everywhere else in the world except for Singapore and Hong Kong. And that was the exam question that started this whole discussion of should we create and white label the whole bank and get it embedded into somebody else's ecosystem. And then as part of that discussion, we said, oh, we actually need to rebuild the technology stack in order for us to do that, because our existing technology stack can't service that kind of scale that you're talking about. And lo and behold, we executed on the first partnership in Indonesia. We executed on the second country. And then we, halfway through that journey, we said, yeah, let's commercialize the technology, right? So then we commercialized the technology, and so it's a 6-year running journey. And last year, the technology finally found a house of its own outside of the bank in audax. And I was obviously a year before that, I was asked to make a choice of whether or not I want to stay in the bank and run the balance sheet business, or become CEO of audax and try to make a go at becoming a enterprise technology business. So I said, in true spirit of getting into trouble, I said, let me try to do something that most people think is crazy difficult.
So I'd like to really break that journey down a little bit more, because there's a lot that you've done in each step along the way to get to where you are right now, sitting in front of us, telling us the audax story as it is today. But the way traditionally entrepreneurs in the financial services sector, the fintech sector, they just abandon ship right from the beginning, effectively. There are very few that are. Your journey sounds extremely unique, I have to say. It's you sort of sound like you've been you've had a very good start from within an institution that understood that. And that's not very common as a story when it comes to origin of tech, building tech, pushing tech out there and doing it. a lot of people think they can do it, and a lot of them fail, which is why we don't hear about it. So to hear about this journey, I'd like to go into that right from the beginning. You looked at this problem internally. How did you approach going to somebody internally and telling them in such a large and well-established institution, what you're doing is broken, it's not working, and we can do it better, and you can make money? Because as an individual, yes, you have a role to play, but to actually get stakeholders to approve, tell us how you started that journey. That's very interesting.
Well, actually, it's not that difficult. What I did was I sent an email to bill.winters@se.com. And he responded to the email and said, let's catch up for coffee when he was in Singapore. And at that point in time, I was doing something else that was kind of deviant, I guess, in the bank. I was an author and a circulator of this email group called Friday Funnies, which pokes fun at things that happens in Standard Chartered. And it has a subscriber base of a few hundred people across the bank with cartoons, basically poking fun at things that happen in Standard Chartered. And Bill said, let's catch up for coffee. And I was like, okay. And Bill's assistant sent me an email, a calendar invite. And I was like, what am I going to say to Bill for 40 minutes, right? I mean, Friday Funny is fun for 5 minutes, I guess. And at that point, I was thinking about this problem, and I had sketched out a number of slides on a piece of paper. So I put 5 slides together, sat down with Bill, and said, "This is
on
something
paper,
we need to think
not
about."
even on computer, on paper.
Yeah, on paper, and I made it into PowerPoint and 5 slides.
I was thinking you had a napkin moment just there.
And I said to Bill, this is something we need to think about doing. Obviously, it led to many other conversations. I met with pretty much everyone. Took a long time. It wasn't that short, but eventually the agreement was, let's give this a shot.
And what was the first iteration of the idea? Because obviously, banking as a service is an extremely vast, complex piece that gets built piece by piece by piece. So where did you start? What was the first thing? They said, okay, let's start. So how many people did you hire? What was the thinking of the first product and services you were going to do?
Yeah, so I started with retail because that was where my passion and interest lay. And yeah, it was me and one other guy, and it was me and 4 other guys after like 3 months. It was me and 10 other guys after like a year, and just kept going. But our first iteration of this was an alpha in Indonesia, in production, whereby we opened it to some staff to be able to apply for a loan in some other white label ecosystem and just get approved for that loan. That was it. It took us about 4 months to cobble together something rough and ready.
That was your MVP moment.
Yeah. And in all honesty, everything that we built for that particular MVP moment we scrapped because we realized that it wouldn't be scalable, and then we had to redo all of it, right? But in 2020, just past the COVID period, we put the platform into production, and this took us about almost 2 years to put the platform into production with the partner, and get it tested. So yeah, it was good fun. It was a massive journey, and obviously this is a very simplified version of that journey. There was a whole bunch of testing. There was a conversation around non-financial metrics and performance metrics for the platform. There's a long conversation around risk. And even the business on which I talked about earlier in the podcast. Who owns the customer was surprisingly a conversation that dragged on for weeks, with people arguing all kinds of different variants of the conversation, where my position was very simple. The customer sits on your balance sheet. You own the customer.
So it's super, super interesting, because when companies traditionally or entrepreneurs go out and raise capital, they have to do this in a very tough manner from the outside, approaching financial institutions to convince them. You were doing this from inside, and essentially with a lot of allies who saw, I believe, what was the value in the approach from a technology first positioning to enable the growth of all these different facets of business, which you said could multiply. Did COVID help in any way fast track some of this urgency for adoption?
First and foremost, I think again it would be an insult to compare me with the entrepreneurs, and it would be insult to the entrepreneurs, right? I have not taken the hard decision to strike out on my own and use my own capital to build a massive business and take the risk that those entrepreneurs have taken. So kudos to them. I don't think we should take that away from those entrepreneurs. I'm an intrapreneur. I came up with an idea within the bank, got it funded by a parent company, executed it, and then decided to commercialize the technology behind it, which is a secondary idea and a secondary business, and therefore and got it funded again. So from that perspective, absolutely, it was difficult. I mean, there are different levels of difficulty for different things depending on the path you take. But in no way do I think that I'm even comparable to the pain and suffering of true entrepreneurs. So that's one. Two, COVID didn't really help the journey. I would actually say that COVID COVID drove digitization of interfaces for an existing BAU business. Yes. But from a nascent business model that we're trying to push through, COVID didn't really help. It limited the ability to interact. Communication became a bit more difficult. Getting stuff through the agendas of senior bankers and regulators became a lot more complex. Because not only now are we not able to see the regulators face to face, and don't forget, we are talking about Indonesia, so it's not even going to be in our native tongue. So that kind of complicated the matters. Yes, we had Indonesians on the team that helped us and had this conversation, but we couldn't even meet the regulators face to face. We had to brief our compliance counterparts in Indonesia via Zoom or via Teams or whatever the interface would be. So I would actually say that COVID kind of made things slower for about 6 to 9 months.
So I guess you were on the wrong side of COVID as you were just trying to build and get more stakeholders together as opposed to deploying and the adoption happen at the front-facing part of the solution stacks that you were building.
Two sides of the same coin. Two sides of the same coin. Right? What I said, and then on the flip side, maybe if we had been able to meet face to face and we pushed the agenda, we may have gotten killed earlier. Who knows?
Yeah. And can you tell us about sort of how you built the company and product a little bit more from, I know it was an internal product services review, but as you were building it, did you build it as an independent unit between, or was it where you got in more units from within the ecosystem that you had access to joining you, almost like a snowball effect? Did you create your own snowball, or did you get it from your own resources around you in the ecosystem you started?
Well, it was a bit of a mix. So I was very, shall we say, deliberate about the composition of the initial team, because my first customer, I mean, for all intents and purposes, was Standard Chartered Bank.
Of course.
Right? So what we really need was an external view with regards to what is possible from a technology architecture and a delivery standpoint, and from a data standpoint, which the bank had some limited capability, but was in the journey of becoming something new. But an internal view of the understanding of the legacy platforms of the bank, so that it smoothens out the delivery process. We had a few engineers who already knew what the integration platform of the legacy core banking system was, that we didn't have to try to go figure that out. But that being said, the technology team that we had was ring-fenced, separate and distinct, because there was always the idea of spinning us out. And therefore, it operated independently of the bank's core technology team. And we did get a few members from the existing technology team of the bank who were familiar with the key components of the bank that we needed to integrate with. But a large majority of the engineers that we hired and the data engineers and the data scientists that we hired were external to the bank. A lot of the product guys that we hired were internal to the bank. So it was very conscious in terms of the decisioning.
That's very, very interesting. It's such a unique, I think, approach to how you've done this compared to other entrepreneurs we've had on our show. And, just elaborating on that a little bit more, funding is another piece of the pie, right? In the sense of, yes, you were internally funded to a degree, but you also have to show results all the time. So did you go through the same kind of course, I know it's sensitive, but I don't need to get into details. Just want to focus a little bit more about how you graduated step by step. did you go through funding on an annual basis? Did you sort of build it to also then get funding from external investors if eventually because you were going to spin it out and you wanted to do it itself, or was it so self-sustaining you don't need any external requirement anymore? Can you talk about the starting, the middle, and where you are now, and that journey you've had as an entrepreneur? Again, that word is brilliant, as financing, building that company.
Yeah. No, so at the very beginning of this journey, we were a department in the bank, right? No different from that. So it was a yearly P&L and yearly
That was
funding.
it.
Yeah, and so in last year when we spun off, there was a capital injection from the bank based on the business case that we put in front of them, and it was trudged out in various formats, and therefore we got injected and we are up and running and serving our clients, and also obviously on the hunt for new clients now that we are outside the bank. We are going around the world, and we've got a few clients in the pipeline, plus one client in that is not Standard Chartered Bank that's in the middle of being delivered right now as we speak. From a funding standpoint, absolutely, we are looking for external funding. We are about to start, actually. Yeah, I just closed out my entire data room. We've just validated everything's good to go. We are about to start. We actually have a potential lead investor in the mix and a couple of follows. And we think that hopefully by the end of this year, early next year, we should have hopefully an external change in the cap table of audax.
Wow. So initially you started off as being a department, so you had a budget, you had a P&L, but you've just recently had your first investment previously to an independent investment round that enabled you to become an independent organization. So you're very much thinking of this as a very, very mature startup and company in this enterprise business, correct? So now you're going out globally for that position.
So most technology, B2B enterprise technology businesses start out with no clients and then spend, 2-3 years trying to get into a bank.
Correct.
So we were lucky. I mean, we came up with a big client as our anchor, and we had clients elsewhere, and we are in the midst of building up the client portfolio from that perspective. So that's really quite useful and helpful, right? And one of the key reasons that we are having this discussion is because we were incubated and birthed from a large global bank. Yes, from a governance standpoint, it is significantly heavier than if you had, built the business out of your own garage. But it also gives a stamp of approval to potential clients everywhere around the world who are banks, who see, hey, this technology platform is not just a technology platform. It is helmed by people who understand how to get it into production and compliance approvals of a large interconnected global bank. Right, so that really helps the governance as well as the security discussions around the platform.
So from where you stand today and the way the business sits, you've got a very big anchor client. And the way that you're servicing that anchor client, is it already global, or are you still expanding with that one anchor client with what you're doing and building for them geography by geography, service by service, business by business?
Yeah. So we are in discussions with Standard Chartered as a parent company, as a shareholder, as well as a client, or in the appropriate fashions, to discuss expanding the use cases within the Standard Chartered network. As we speak, right? We have an account manager dedicated to Standard Chartered, for example. Obviously, it's a little bit easier because I can pick up the phone and call most people in Standard Chartered who are friends and colleagues, ex-colleagues for the last decade or so. So that helps. But we have to deal with the parent company and the shareholder as if they were any other client. And my core interest now is really to go out and expand as per my own projections in the business case of multiple global clients in various regions around the world over the next couple of years. We are hoping to land something in the Middle East and something else in Southeast Asia relatively soon.
You're an international company looking to be international and global, competing with a number of institutions that are already established in this space, right? What do you think really differentiates you from a perspective? Is it your intrinsic knowledge of how the business operates that separates you from just being a technology provider, where when you're doing RFPs or when you're trying to sell to another business, it's just not a cost, you're cheaper than a competitor, or, you're faster than a competitor. How do you avoid that commoditization conversation when you engage with potential customers?
Actually, we have four very unique selling points. The first of which is the fact that not only are we a technology company, we are a technology company born of bankers, by bankers, for bankers, right? So we understand the complexities of the business, not just from a business standpoint, but also the complexities of putting something from a technical standpoint into production for a bank, right? The
You're
security
really
element.
speaking their language effectively.
Exactly. The security elements that need to be considered, the number of tests that need to go through, and so on and so forth. And we've automated all of that on our platform. So that's one. Two is the fact that if you compare from a like-to-like basis, there are not that many players in this space with regards to a full bank in the box that you can spring up in months rather than years. There are players in different components of the banking stack, but certainly as a full package, it's relatively scarce. There are a few that have been interesting lately, but it's a very nascent space. The only one I can think of as an incumbent, and that's arguable, is probably Temenos. And I think they are looking at all of players like us with some interest as well as to how this will play out. Obviously, then the last two is exactly as you rightly pointed out, Gaurav, is from a speed perspective, it is immense because it is pre-integrated in the box. We can get anyone up and running in months quite quickly. The actual deployment is days, but the integration with the local data sources will take some time. And finally, because it is our IP in a box, fully integrated, you don't need to cost 20 to $50 million for a full banking stack. We do 3 to 5 million.
Got it. That's hugely impressive, right? That gives a lot of perspective to people. I imagine that, the way the ecosystems are working, especially given sort of that you've come from an institution and you have an institution on your cap table as well. With regards to the number of institutions you're looking to provide technology as a service to, your banking as a service, have any of them come up with the conversation of saying, would it be possible for the IP to be ours? Because I'm seeing a lot of financial institutions across all sectors have a different mindset. We're not always favorable to a startup or an entrepreneur that's sort of scaling on his journey, as opposed to being, let's say, the market dominant leader that can command a conversation. So I'm curious, in your conversations where you're beginning an international journey very strongly, have those conversations come up on a build, operate, transfer model, and we like the IP and we'll give you a perpetual license versus, you be our partner effectively in banking as
Yeah,
a service?
those conversations have come up quite a few times. And my I guess without compromising anything,
Of course.
my initial response to that will always be, we are open to that conversation. I don't have an issue with it as long as it is priced correctly.
Right, and because I'll tell you why that is, right? And again, as an operator, an owner, and an investor, right? The perspective is, how do I scale and grow without as many obstacles going forward? And if you have that attitude, that's very important, I feel, because what happens is there are a number of Kelvin Tans within financial institutions that say, hey, give me a budget and I'll build it myself. And they'll go through the same pain and they'll do everything else. And the most discouragement you can give to make your business successful, in my opinion, and I'd love to hear your perspective on this, is to discourage that by saying, hey, why do you want to spend 6 years doing this when you can do it now and you can own it as well and we'll be your partner in building it out, I guess, is a very interesting way to do it. So you're an open-minded person from that perspective, is what it sounds like.
Absolutely. I mean, look, our mission is to ensure that banks around the world can really upgrade themselves and serve customers better. How they do it, if this is what it takes, so be it, right? We will pivot around it and ensure that that capability is made available to you in banks around the world. And we'll have a conversation around how we create the monetization opportunities on the back of it.
Kelvin, thank you so much for sharing your story. It's been a pleasure. Look forward to interacting with you after this. We could talk for hours, but unfortunately, I have to hand back to Ronit. Been a pleasure. Thank you so much.
Pleasure as well, Gaurav.
Kelvin, thanks so much for joining. We're out of time. I think I'm going to take away the image of you and your groupies, as Gaurav described it. BaaS founders as I don't know, as rock stars on tour.